All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades in Wall Street from Main Street. If you're not done so already, please like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Hey, looks like we've been doing this for just over a year now, so pretty awesome stuff. Thanks to everybody. Thanks to Jason for having me on, and yeah, thank you for showing us the support this past year. Anyways, let's get into it. So S&P 500 here, another red week, very slightly red, but a red week nonetheless. And the real gut shot came on Thursday, so that was this red candle here after the Wednesday reversal. So we got a little bit of a squeeze on Wednesday after the Fed made its comments here, and I think the market was kind of worried about a possible 70 basis point hike. That didn't happen, so the market did manage to rally, which was immediately faded on Thursday, and really just kind of a pause candle here on Friday. Now, they did save the lows, so it closed just above the lows there. So they did save that. My suspicion here is that somebody got blown up on a leveraged long bond trade. As you guys know, interest rates are soaring right now, and we'll take a look at those in a little bit. But overall, it was a very bearish kind of feeling week, and you get the sense that investors are really just kind of worn out with this market right now. But let me show you here on the weekly time frame. And it's, before I even get into that, the IBD bull bear percentages came in on Friday at bears at just under 40% and bulls at 31. So that's not far off from the March 2020 levels. So that was down here. And, so you got sentiment is extremely bearish right now. But believe it or not, if we look on the weekly time frame, it's not nearly as bad as advertised. So you have a move up and kind of a pullback here. And they did, like I said, they did manage to save this tail candle low. And believe it or not, with yesterday's close, I do have a few proprietary buy signals on this market right now. Now, these are not long-term buy signals. They're just for maybe a bounce, possibly into OPEX week, maybe into the week after that. But I think we're going to resume turbulence if that happens, not too much longer after. I think this market probably sells off into the middle of summer, more than likely, but it doesn't go down in a straight line. Nothing goes down in a straight line forever. And if you can see, we even, came down here, went down for, a month or so, rallied up, went down for a month or so. It's possible we rally up here. Good volume here on the tail candle this week. And again, they did save that on a weekly closing basis. And you're coming into a lot of support here. So look at the 400 whole round number. Now, I know everybody wants this gap to fill, but oftentimes the market makers, they know this. They know everybody's sitting right here at 400, and they won't let it fill, at least not on the first try, because, they have to pull the rug, basically, essentially. So you got all these people down here waiting for that order, and a lot of times they won't let them fill. And you get that counter trend rally, then it can fill on the next time, and that the next time will probably actually break it. But you also got that 100-week moving average and this kind of broadening channel here on the downside with this trend line going all the way back to 2018, a 5-year trend line going back to 2018. And it's just below that. So even if we were to dump a little bit lower, there's a lot of support down here. Also supporting this theory, let's look at the triple Qs here. So even if we were to test 300 or so next week, again, you're oversold already, going into a major area of support. Again, a diverging low kind of trend line here on the daily. You can see a falling wedge pattern. These are generally bullish reversal patterns. If we look at cloud software, which makes up a large part of technology, IGV hit its 200-week moving average, and again, just below is the pre-pandemic highs. So really not far off from a lot of these levels here. If we look on the monthly, you can see the 50-month moving average right in that range, oversold going into it. So chances are, there's going to be some type of reaction there. Semiconductors, which you guys know I always follow as a leading industry group, they actually held up this week, and believe it or not, so we had kind of a breakout of a falling wedge pattern, and we have not broken back below that. If we look on the weekly, again, semis were green this week. Believe it, it's hard to believe, but semiconductors were green this week. So that's generally a good leading indicator. And look at all this chop in this area. So that's going to be support as we come down here. And there is, there is fuel for a potential squeeze again with everybody being short in this market. Now, again, like I said, this isn't a long-term buying opportunity, but it could be a squeeze for a couple of weeks here. All right, so let's talk about rates. So I'm going to show you this pattern here, and really the big target here on rates. So we've had some smaller targets. They've all been satisfied already, but the big target here is the inverse head and shoulders, and I'll just show you how to draw it in right here. Now, this is a target, a potential target I had months and months and months ago before this pattern even triggered. You just take the low to the high there, and this is how you get your measured move. So right to the breakout, and you're right up to about 3.2, and that coincides with these pivots up here. So again, there could be a little bit more upside in yields, maybe some type of blow off move, but I think that yields here now, they're due for a correction, a pullback, maybe the 2.4, 2.5 area. Once I see a top, I can generally figure out where it's going to go. Now, that doesn't mean that they're going to stay. I'm not saying this is the top, but a corrective top at the very least. I mean, look how overbought they are here in the last couple of months. So again, that 3.2 area, and that also coincides with what I was just saying. So we know that tech and bonds kind of trade positively. So yields trade inverse to tech, but let's say we had one little kind of gap down, kind of one last flush here into this 300 area on the Qs. That would possibly coincide with 3.2 on the 10-year. So I got to figure that is probably the case here, as we're seeing a lot of areas of support and price targets, so on and so forth, kind of converge into these levels that we're coming into. TYX, the 30-year, finished the week at 3.221. And again, here's your 200-month moving average on the 30-year. And again, these pivots up here going back to 2018. So that would coincide potentially with 3.2 on the 10-year yield. So HYG here. So I told you guys are going to get to 78. Got there right on Monday, gapped up, hit the 20, bounced back down. This should have next support area should be about 77. So you went up here, couldn't break through it, and then you broke through. That's your area there, 77. And, again, that may coincide with a 3.2 10-year. So we'll have to watch that going into next week. And one thing that has helped out a little bit, at least for the financials, is the curve hasn't flattened as much lately. It's actually steepened a little bit. And that's possibly why you're seeing a little bit of a higher low there in XLF. And again, kind of diverging low here with these 3 lower lows. So we'll see again if this can get a little bit of a bounce next week. And if this squeezes it, it will have some upside. Again, XBD finally hitting my target. I said it had to go down to that 400 area. We got there. Again, diverging lows. And you also have, very much like the semis and the triple Qs here, you have kind of this falling wedge type look here on the daily time frame. So we'll see if it can push through that. Maybe you can get up to this blue trend line around 460, which is down sloping. So that would kind of be your max upside that I would see for the broker dealers. But again, yield curve steepening does help those out a little bit. Crude here. So crude had a decent week. It's still kind of choppy and range bound. So when I see that, I generally want to flip over to the weekly and clean things up. So basically, all you really need to concern yourself with is 112.93. If you can close above that on a weekly basis, that would open the door for probably a good amount upside to 121 or so on spot crude. But we'll see. It's going to be resistance. I do expect it to get defended, and we'll have to see how it reacts, really. If it gets rejected and we take out this low, it's probably going to go back down and test 95 again. Overall, though, crude's held up really well, and it's been generally range-bound the last couple of months. I told you guys it's going to have to chop around, and I think it is in some type of consolidation or corrective mode at the moment, and for probably the bit of the foreseeable future. But it does look like there is a pretty high, much higher floor here in these energy prices. XLE did come up and backtest this trend line. So the XLE has been a little bit stronger than the XOP or OIH, but they've all held up really well. You see the XOP there. OIH has been the weakest, still kind of just struggling with this daily 50-day moving average. But, overall, it's hanging in there really well compared to a lot of other stocks in the sector. Nat gas here, so got all the way up to $8.99, and really violent engulfing reversal on Friday. This looks very much like the pattern here in October, and I've been trying to play it just like that, but it's been very tricky here. So this move up, down, we call this a drop and pop into the 20. nice pop, and then a slight higher high, and then a good reversal. So maybe nat gas has to come down to $6.50, $7 again, and kind of chop in that range for a while. But either way, crazy volatility in nat gas, and it did basically get up to $9 before reversing again. Just very, very overbought here in the near term, all things considered. Let's look at CCJ. So we'll talk some uranium. Now, CCJ is into a good level. It went into a good level on Friday, right around $23. So you got the daily 200 moving average. And on the weekly, this was kind of your breakout area right in this area. So we came down, and then we couldn't get above this 23 handle. And so basically back testing that with the 50 MA. There's also a couple of fibs in here that I drew on earlier. So it should be a good level for support here for some type of a bounce on CCJ. Same thing with the URNM right in this area around 67. This was where we started to consolidate bearish, and then it reversed. So that's going to be support as it's being back tested here. So we should get a reaction off of that with the URNM. So maybe look for a little bit of upside in the coming weeks on these uranium plays. Mosaic for potash, again, I told you guys it was going to get up to that 80 handle. Got very, very close here. So, 79.28, and it is pulling back here. So maybe a little bit of chop is in order. Again, really just went parabolic here on pretty much every time frame. Same thing with Intrepid. Told you guys 125, got up to about 123 or so, and now pulling back pretty sharply. So this one should get a bounce in this area. If it does continue lower, you're going to have support at 52, and then a lot at about 47, 48. So those are the levels there on the potash plays. Dollar index. Really just kind of a choppy last week and a half or so. It is trying to consolidate up here. But again, if the 10-year tops out soon, this should pull back with it. And then your levels on the downside would be 99, and then major level at 97. I don't know if it even gets that low, but those are going to be your levels there on the downside on the dollar index. But again, it's all just tied into rates right now. All right, gold. So again, kind of a quiet week compared to a lot of the rest of the broad markets here. You did have a little sell-off Monday and then kind of recovered a little bit by Friday. On the weekly, I don't see anything really terrible. So you came down and tested kind of this 150 moving average, and you kind of tested this area right here around 1840, 1850. So it's holding up pretty well on the weekly time frame. The one thing I don't really like right now is like the miners here. I don't like that we got really overbought and then we had a major sell-off. I was looking for a pullback here, a correction, but this is a pretty sharp, steep pullback. I think you want to own these. I told you guys last week, 32, that's going to be a good buy area there. If you follow the GOAU, it's going to be about 18. Now that's a lot. Proportionately, this is a lot closer here. So, I mean, the royalty and streaming companies are just in much better shape in general, but those are the levels I see. Maybe it gets a little bit lower if GDX does, so maybe 1750. I'd have to run some more numbers on that, but overall, this should be a good level here for GOAU in the near term. Silver, again, really just got really oversold here, and just a really choppy week, all things considered. I don't really like this weekly time frame. You still have the potential to put in higher lows, and same thing on the monthly. You still got a potential to put in higher lows, and you're still above this green bar. So not the most terrible look on the monthly, but really just a weak showing here for silver over the last month or so. Now, again, the positives here are it's wickedly oversold at this point. So it is due for some type of a rally, probably up into that 24 handle, but we'll need to see how it responds here in the coming weeks before I can give really more of a clear direction on it. Platinum and palladium, really just kind of a choppy action, all things considered. You can make a case you had kind of a potential breakdown here on this wedge pattern, but we'll see often these give you kind of fake breaks, and maybe it'll reverse on Monday. Palladium's a very volatile and thin metal to trade. Copper here, a little bit on the weaker side, so I don't like how on the weekly we closed below this green bar here, so 425.55. It's a level I've had on here for months and months now, probably over 6 months. And it did get closed below, so that does open the door for a move back down to $4, which I think would be a good area of support for a nice trade on copper there. But overall, a little bit of a weak showing. Tried to back test that 200 moving average on the daily, and that did fail. So possibly moving lower here on spot copper. All right, so let's flip over to Bitcoin here, coins here. So again, this sort of supports my theory that somebody got liquidated on Thursday, because a ton of Bitcoin was liquidated as well, as the 10-year basically just soared higher in the morning. And I know Bitcoin is used as collateral for a lot of things, and this is probably one of the things that got liquidated among a bunch of tech stocks that probably got liquidated as well. But Bitcoin got dropped like a bad habit on Thursday and continued a little bit of downside on Friday. So I've been showing you guys this for a while. You know, this kind of bearish channel, it's starting to break down finally. Now you know, if this breaks down here, you know, you're headed down to that 29,000 area. There is a chance though that, you know, you do have this, you do have these tail candles in here. So, you know, there is a chance that, you know, it could rally up. You know, this is where price tried to break down and was defended. So there's a chance it could get defended here, but overall on a bigger picture look, this is not a longer term bullish chart here. In any really way, shape, or form. And same thing on Ether, although Ether has held up a lot better. You know, it's still has potential to make higher lows here. You're still above this green bar. It's in a much better technical position. You also have this trend line here. So it could make a higher low around 2,400. I do like Ether a lot better. But all things considered, still, you know, a weak pattern. And this did get liquidated with Bitcoin, you know, just like how crypto does, you know, tend to trade all kind of in lockstep for the most part. So, and this trend line here is probably too damaged at this point unless we were to rally up here in reverse. But again, all things considered, Ether is in a much better technical position, but I do not like either of the coins at this current time. All right, so overall here, again, we talked about sentiment, and I talked about the potential for a rally into OPEX week. Again, there's an absurd amount of puts in the system, and it's very reminiscent of the March OPEX, where there was just tons of puts going into an OPEX week, going into FOMC. And again, when I see everybody on one side of the boat, I think the boat's probably about to tip here. Another thing to look at here is take a look at the VIX. So we've got lower highs here on the VIX altogether, and we've got lower lows on the spider. So one of these guys is lying. And when I see a ton of puts in the system and I see everybody betting on the downside, I have to think that we're probably due for a rally here. So I think the VIX personally is lying. I think it's a little overdone at this point. But again, we're not looking for a historic low here. We're looking for a couple of weeks at the most. And then I think we probably have some more downside coming into really the middle of the summer. Anyways, guys, I'm gonna wrap it up here. Thanks for watching. Come find Jason on Patreon. Come find me at carnivoretrades.com, and I'll talk to you guys all next week.